So recently, the Real Estate Developers Association of Nigeria put out a policy document addressing the high cost of housing in Nigeria. The policy document is titled Cement Pricing, Record Industry Profits and Implication for Housing Delivery in Lagos. Basically, this policy document was to address the rising cost of housing and particularly to put a finger on where this cost largely goes to, which is cement pricing. Currently, it's retailing for about 11,500 to 12,500 naira per bag. So a quick rundown of the executive summary. Nigeria's cement industry is generating record profits, but Nigerian builders, homeowners, and real estate developers are bearing the cost. With cement bags now retailing for between 10,500 to 11,500 in Lagos, prices have more than doubled in 3 years. Meanwhile, Nigeria's cement producers reported average core operating profit margins of approximately 49% as of September 2025. I hope you heard that. 49% profit margin. For context, the Nigerian cement industry achieved formal self-sufficiency as early as 2012, with installed production capacity estimated at over 58 million tons per annum as of 2021. In September 2025, Nigerian cement producers reported average core operating profit margins of approximately 49%, up sharply from 34% in 2024. These margins are well above international benchmarks for the cement industry and far above comparable producers across sub-Saharan Africa. This is very important. 49% profit margin in Nigeria. Meanwhile, they make less profit margins in other sub-Saharan African countries. Let me read on. The Agora policy report raises an uncomfortable but critical question. If high production costs are the primary driver of elevated retail prices, why can Nigerian producers sell cement profitably in neighboring markets at prices lower than what Nigerian consumers pay at home? This price differential strongly suggests that market structure and pricing power it confers, not production cost alone, are driving unaffordability. In other words, your cement producers are making outrageous profits here in Nigeria, and they are still profitable in other African countries where they sell. But yet, prices in other African countries are far lower than what we are made to buy here in Nigeria. Nigeria's cement industry was built on a policy compact. The government offered import protection, preferential FX access, tax holidays, and exclusive limestone concessions in exchange for large-scale investment and affordable prices. By 2012, the production side of the bargain had been fulfilled. The affordability side has not. In other words, the government gave cement producers a lot of concessions and gave them import protections. So the government has been helping the cement industry in order for them to produce the cement that we need. But on the other side, the cement producers, while enjoying these concessions, have not factored in that they have a part to play as well. They are not reducing prices. So Nigerians, instead of blaming developers and blaming landlords for the high cost of housing in the country, ask the cement producers, why are you making outrageous profits here in the country and selling at a higher cost to us, but selling at a lower cost in other African countries, yet still making profits there? That is the question that we should be asking.